Imagine a financial system just so entrenched, so expensive, and really frustrating that tens of millions of people are completely left out.
Yeah.
We're talking about Latin America, specifically Brazil, and today we're taking a deep dive into the fascinating story of how one company, Nubank, completely flipped that script.
Right.
Our mission is to understand how they disrupted this massive oligopoly and built a financial powerhouse that now serves over 100 million customers. It's quite a story.
It really is. And we'll explore the strategic genius behind their approach, from their ultra-lean digital model to an almost, unbelievable focus on customer happiness.
Mhm.
You'll see how they went from just a single no-fee credit card to a full-blown financial super app,
Mhm.
eventually becoming the most valuable financial institution in Latin America at its IPO.
Wow.
By the end of this deep dive, you'll have a clear understanding of what made this possible and what it means for the future of finance, not just in Brazil, but really globally.
Okay, let's unpack this then. To really appreciate Nubank's rise, we need to set the scene. What was the financial landscape actually like in Brazil back in, say, 2013 when Nubank was just an idea? What made it so ripe for disruption?
It was, to put it mildly, a classic oligopoly. You had just a handful of major banks controlling a staggering 80% of the market.
80%.
80%. And what's crucial here is that these incumbents impose some of the highest fees and interest rates, really anywhere in the world.
Hmm.
Just to give you some context, nearly 40% of their total revenue came from fees alone.
40%. Just from fees.
Yeah, compare that to maybe 15, 20% in other major South American countries. That's a huge difference. And it created a lot of friction, a lot of frustration for the average consumer.
I can imagine. And what about the people caught in this system? Who was being left behind by these traditional banks?
Well, the estimates are around 60 million Brazilians were either underbanked or completely unbanked.
60 million.
60 million. They were essentially ignored by these traditional institutions, largely because of the high costs tied to, physical branches and the incredibly bureaucratic processes involved.
Right.
This wasn't just an inconvenience for those people. It was fundamentally a profound market failure. A huge part of the population just couldn't access basic financial services.
That's staggering. So knowing this landscape, this oligopoly, how did Nubank even begin to think about competing? I mean, against such powerful, entrenched incumbents, did they try to poach customers from the big banks?
That's what's fascinating. They didn't, not directly. Nubank pursued what's known as a blue ocean strategy.
Okay.
So instead of fighting head-to-head for the existing customers that those big banks already had locked down, they deliberately chose to create a brand new, uncontested market space.
Interesting. Who are they targeting then?
Their target: digitally native consumers, younger people, and anyone who is just fed up with fees, the fee-averse consumers who are being ignored.
Right.
And in a strange way, the incumbent's own model, high fee, high cost, actually kind of protected Nubank's entry. The traditional banks simply couldn't easily pivot to offer something truly competitive without cannibalizing their existing revenue streams.
Ah, so their own structure made it hard for them to react.
Exactly. Their legacy systems and costs were just too deeply embedded.
That's a brilliant move. Focusing on the overlooked rather than battling head on.
Mhm.
We hear the genesis of this whole revolution actually started with a pretty personal frustration, didn't it?
It did, yeah. The story often starts with David Velez. He's Colombian, had an MBA from Stanford, and was working for Sequoia Capital in Brazil at the time.
Okay, the VC firm.
Right. His mission was actually to invest in local tech companies. But he found himself completely baffled by the bureaucracy and, frankly, the exorbitant fees when he tried to open a simple bank account just for himself.
Just a personal account.
Yeah. And on top of that, he struggled to find viable tech startups or even enough skilled computer science engineers to invest in. So this professional frustration kind of collided with his personal one. Mm-hmm.
And it became what he calls a crucible moment. He realized, if he couldn't find the entrepreneur to solve this massive problem, well, he had to become that entrepreneur himself.
Wow. And so he co-founded Nubank in 2013 with Christina Junqueira and Edward Weibel, basically taking on the seemingly impossible task.
That's absolutely.
I understand there were even warnings about the immense risk involved. I read somewhere friends told him things like, they're going to kill you, they're going to kidnap your kids.
Yeah, it sounds dramatic, but it speaks volumes about the entrenched power he was challenging.
Definitely. But his outsider perspective must have been key, right? Not being part of that establishment.
Absolutely. His lack of ties to the Brazilian banking establishment allowed him to see all that dysfunction not as an insurmountable barrier, but as a unique, kind of fertile opportunity for true disruption. He wasn't constrained by the existing ways of thinking. Okay, here's where it gets really interesting for me. How did Nubank actually build a business model that allowed them to offer something so radically different, like, no fee products, when everyone else was charging an arm and a leg?
Well, the absolute core of their blueprint was to be a digital-only bank, right from the start.
No branches at all.
No physical branches. Think about it. Traditional banks often allocate up to 50%, half of their operational costs, just to maintaining their vast branch networks.
Right. The real estate, the staff.
Exactly.
Yeah.
So by ruthlessly stripping away that legacy infrastructure, Nubank achieved this huge structural cost advantage. We're talking an estimated 85% lower cost to serve compared to the traditional competitors.
85% lower.
Yeah. And the key insight here is that this wasn't just about cutting costs for its own sake. It allowed them to fundamentally reshape the value proposition. It made no-fee banking a sustainable reality, not just a gimmick.
That incredible cost advantage must have been absolutely foundational. It let them offer that disruptive value prop, a credit card, a digital account, zero fees. And I understand they fueled their early growth organically, mostly through word of mouth. Was that really effective?
Incredibly so. This organic growth led to exceptionally low customer acquisition costs, SCAC. It was reported to be as low as just $7 per customer at points.
$7. That's nothing in finance.
It's remarkably low, and when you look at their efficiency ratio, which, basically tells you how much it costs them to generate $1 of revenue, it was fantastic.
Okay.
Like 24.7% in Q1 2025, 28.3% in Q2 2025.
Wow.
That's just a powerful testament to the financial viability and the truly lean nature of their digital-first model.
Okay, so beyond the lean model, another key ingredient we keep hearing about is this idea of customer love. How do they cultivate that? How do you make that a competitive moat, making people genuinely love their bank? That sounds unusual.
It does, but it's absolutely central, and I'd argue very hard for others to replicate. It's this fanatical focus on the customer, and it was deeply embedded in their company culture right from day one.
How?
Well, their primary purpose, drafted way back in the earliest days, was literally to fight complexity to empower people. That mission became their North Star for everything.
Okay.
And there's a great example, another crucible moment, you could say. There was an instance where the leadership team chose to actually reverse fees for customers because Nubank had failed to send out payment reminders on time.
They gave the fees back, even though technically the customers still owed them.
Yes. They made that call, even though it definitely hurt short-term profits.
That's a bold move, sacrificing short-term gain for long-term trust. But didn't that create tension? I mean, in a competitive market with profitability goals, investor expectations, does customer first at all costs really work?
It's a fair question, and it certainly could have created tension, but by demonstrating that kind of commitment really early on, they built immense loyalty. Their core value wasn't just lip service. It was genuinely to make customers love us fanatically.
Dramatically. That's strong.
It is. But this profound trust, built through transparent actions like reversing those fees, is precisely why customers didn't just use Nubank. They enthusiastically recommended it to friends, to family. It became an engine for growth, not a drain on resources.
And that engine of growth is exactly where we should go next. So they have this incredible foundation, low cost, super high customer loyalty. How did they scale so rapidly? How did they actually turn that customer love into this word-of-mouth machine?
Well, in the early days, they did something quite clever. They used a velvet rope invitation-only approach for their credit cards.
Create scarcity.
Exactly. It created scarcity and buzz. And for a significant period, they famously relied almost solely on word of mouth for growth. Something like 80% of new customers were coming from referrals.
80%, that's huge.
It's massive. So instead of burning capital on, big traditional marketing campaigns, they reinvested those savings directly back into making the customer service even better and offering competitive salaries to attract great talent. It created this powerful, self-reinforcing loop.
Okay, let's connect this to the bigger picture then. How did they evolve their product offerings? Going from just a credit card to becoming a full super app, that's a huge leap.
It is a huge leap, and they did it quite methodically. So Their first offering, that no-fee credit card back in 2014, was managed entirely through a mobile app, which was a massive draw at the time.
Right, very modern.
It addressed a clear pain point: fees and bureaucracy, and it had a relatively low barrier to entry for customers. So once they established that loyal customer base,
They could build on it.
precisely, they began a very deliberate expansion. In 2017, they launched Nukanta, their digital account. This was crucial because it started capturing customer deposits.
Which they need to fund lending, right?
Exactly. Deposits are vital for funding lending operations. After that came debit cards, then personal loans in early 2019, and then even business accounts for SMEs.
Okay, so adding layers.
Adding layers. And then they started using strategic acquisitions, like buying the investment broker EaseInvest in 2020, plus partnerships, like with Wise for international transfers. This allowed them to diversify into investments, insurance, international accounts.
Wow, the whole suite.
Yeah, the whole suite. It's all part of their goal to become this comprehensive financial super app. And the metric they watch closely there is increasing their average revenue per active customer, ARPAC. They want to get that from around $12 up to a target of $20 to $30.
Right, getting more value from each customer. Now, behind all this growth and this great customer experience, there must be some serious technology powering it all. What's making this work such a massive scale?
Oh, absolutely. Technology is fundamental. They adopted a cloud-first approach right from inception, using platforms like AWS that gave them agility and scalability, which was pretty rare for a financial institution back then.
Still kind of is, for the big ones.
It is. And some key components of their tech stack include an immutable database called Datomic.
Immutable,
Meaning every piece of data is permanently recorded and can't be changed. This ensures incredible data integrity, which is vital in finance. And they use a computing framework called Spark, which allows them to process massive amounts of information basically in real time.
Okay, why is real time so important?
Well, that real-time analytical capability is absolutely critical for risk management, especially when you're dealing with underbanked markets where traditional credit history data might be scarce or non-existent.
I see.
So by applying machine learning and AI to their vast data sets, Nubank can make highly accurate and really rapid decisions on things like credit underwriting, fraud detection, and even improving the customer experience.
So the tech lets them serve people others couldn't.
Exactly. This technology-enabled feedback loop allows them to profitably extend credit to a population that traditional banks would typically reject as too risky or too costly to evaluate.
Okay, let's talk about the money then, funding all this.
Yeah.
How did Nubank raise the capital for this massive growth, and what's their financial story looking like today?
Well, they attracted significant investment. No surprise there. They raised over $2 billion across 16 rounds.
$2 billion.
Over $2 billion. And from really top-tier investors, Sequoia Capital, Founders Fund, even Berkshire Hathaway got involved later on.
Wow, Buffett's company too.
Yeah, that influx of capital certainly signaled their disruptive potential and validated the market opportunity. They hit unicorn status, a valuation over $1 billion back in 2018.
Right.
And the culmination of this growth phase was their historic IPO in December 2021 on the New York Stock Exchange.
Big moment.
Huge moment. That listing raised $2.6 billion and valued the company at an incredible $42 billion. That made it the most valuable financial institution in Latin America at the time.
$42 billion. More valuable than the old banks.
At that moment, yes. And a really unique and I think powerful feature of the IPO was this program called New Socios.
New Socios, what was that?
It allowed about 8 million of their actual clients to receive a piece of the company, essentially a share or a BDR in Brazil.
So they gave shares to customers.
Yes. Further deepening that customer love and alignment.
That's pretty cool. And how are they doing now financially?
Their fundamentals look strong. If we look at Q2 2025 figures, revenue hit $3.7 billion. That's an 85% annualized growth rate since 2021, which is just phenomenal growth.
Incredible.
And net income was $637 million for the quarter. They've reached 122.7 million total customers, with 102 million of those being monthly active customers. And that ARPAC figure we mentioned, it's sitting at $12.02.
Okay, impressive numbers. Now, this raises an important question for me. Why did they expand beyond Brazil? They went into Mexico and Colombia. What's the strategic importance of that move? Was Brazil not big enough?
Well, Brazil is huge, but strategically, looking at Mexico and Colombia makes a lot of sense. Those two markets, together with Brazil, represent about 60% of Latin America's entire GDP and population, so the growth opportunity is just immense.
Okay, pure market size.
That's part of it. But this internationalization isn't just about chasing growth, it's also a really significant risk management move.
No.
It dilutes their reliance purely on the Brazilian economy. Brazil can have a challenging macroeconomic environment, and frankly, delinquency rates have been rising. They hit 6.6% in Q2 2025 for Nubank in Brazil.
Ah, okay, so spreading the risk.
Exactly. By growing their customer base and, importantly, their deposit base in Mexico and Colombia, Nubank is creating a kind of shield. It helps balance their overall financial performance and mitigates the impact of stress in any single market.
Makes sense. And how are they doing in those new markets? Is it working?
They've shown really impressive traction so far. They've already hit 12 million customers in Mexico. They've become one of the largest credit card issuers there already. And crucially, they recently secured a full banking license in Mexico.
Big step.
Very big step. And in Colombia, they have 3.4 million customers. So significant progress.
Okay. Despite this meteoric rise, though, no company is without its challenges, right?
Right.
Especially one growing this fast in complex markets. What kind of headwinds is Nubank facing now?
You're right. There are definitely challenges. One of the most significant, and it's a tricky one, stems from what some call the wicked problem of financial literacy, particularly in Brazil.
Well, the problem.
Yeah, meaning it's a complex issue with deep roots and no easy solution. A large portion of the population lacks the basic financial education needed to manage their finances effectively.
Okay.
So, for example, many people might use credit cards not just for convenience, but as a kind of recurrent extension of their monthly income.
Which can lead to trouble.
Exactly. It can unfortunately lead to a higher potential for financial loss and ultimately unmanageable debt for those individuals. That's a societal issue Nubank has to navigate carefully.
Right. A responsibility there. What else?
Well, Nubank's very success has brought increased regulatory scrutiny in Brazil. There is a proposed regulation that might restrict fintechs that don't have a formal banking license from using the word bank in their names.
Ah, so they might have to change their branding.
It could force a costly rebrand, or it might push Nubank towards obtaining a full banking license in Brazil, which would subject it to more stringent and likely more expensive regulatory standards.
Okay, a regulatory hurdle. And as they expand internationally, you mentioned Mexico and Colombia, are they finding the competition different than what they first faced in Brazil?
Absolutely. While their international expansion is strategically sound and showing success, they are facing a more prepared competitive landscape, particularly in Mexico.
How so?
Unlike in Brazil, where the traditional banks were maybe caught a bit flat-footed by Nubank's purely digital model, the Mexican incumbents have had more time to observe and react. They've fortified their own digital offerings.
So the element of surprise isn't quite there.
Exactly. It means Nubank's growth trajectory in those markets might not be quite as explosive as it was during its early disruptive years back in Brazil. The fight is maybe a bit more balanced.
Right. So how is Nubank positioning itself now in this evolving landscape? What's their future outlook? Are they still the scrappy disruptor, or have they kind of become the new incumbent themselves?
That's a great question. They've certainly transitioned, I think. Nubank is now a powerful incumbent in its own right, especially in Brazil. And their success has undeniably forced the traditional banks to change, to offer more competitive and more digital products.
So they've shaken things up for everyone.
Definitely. And while Nubank faces competition from other fintechs too, the market, particularly in LATAM, is just so large that there's likely room for different players to coexist, serving different customer segments.
Okay.
You know, traditional banks might still hold on to an older, more established clientele, while Nubank continues to appeal strongly to that younger, digitally savvy demographic that was previously underserved.
So how do they keep growing from here?
Yeah. To sustain its growth and maintain its leadership position, Nubank is clearly shifting its strategy. It's less about purely customer acquisition now and more about increasing wallet share from the customers they already have.
Getting deeper relationships.
Exactly. They're focused on expanding their product portfolio to meet the needs of different customer segments. Think high-income clients with products like their premium ultravioleta card, or developing new lending solutions specifically for small and medium-sized businesses.
That's a fascinating shift. So the big question then is, can Nubank maintain that agility, that customer centricity that defined them as a startup, while managing all the complexities of being this huge, multi-product, multi-geographic financial powerhouse? It sounds like their future success really hinges on striking that balance.
It absolutely does. That's the core challenge, the core question for them going forward. Can they scale the culture along with the business?
Well, we've certainly seen today how Nubank identified this profound market failure, how they leveraged cutting-edge technology, and how they really prioritized that customer love to fundamentally change financial services in Latin America.
Mhm.
It's truly a powerful story of disruption that has reshaped an entire industry.
It really is.
Yeah.
So what does this all mean for you, the listener? I think Nubank's journey highlights the profound impact a truly customer-centric approach can have, even when you're up against overwhelming odds and really entrenched power.
Hmm.
But it also begs a question looking forward. As digital financial services become the norm everywhere, will the unbanked or the underbanked truly achieve financial literacy and genuine empowerment? Or will new forms of complexity, maybe digital complexity, emerge?
That's a great point.
It's definitely something to consider as you think about the future of finance wherever you happen to be.